me see how I'll solve this problem on ground. Alright, so let me know if you guys can hear me and see me at the same time. You can hear me and see me at the same time, please type Y. Okay, okay. I just figure out the angle of this nice software I've been using. So we know for that, let me first give you some time for my loyal subscribers, and I want to do a quick shout out before I start this video. Look, this video is gonna be full of information. Okay, I'm gonna be giving you the nitty-gritties of what understanding the basics of forex, and this part of this series is gonna contain what risk management. I was speaking more on what risk management, so I want you to stay tuned. As usual, get your pen, get your jotter, and get a bottle of water, because it's gonna be full of information. So without further ado, let me do a quick shout out to a few people that I've actually been noticing. A quick shout out to Rahul from India. So I don't actually notice that people are actually watching me from India, all the way from India. That's about 500,000 miles away, you know, from the great country of India. And we actually spoke today, and we spoke about a lot of things. A big shout out to Rahul. And that shout out to I don't know this guy, but his name starts with his username is GROOY. So GROWWW. So the guy is actually, you know, commenting on many of my videos, and I've actually been seeing him. So a big shout out to you. I don't actually know your name. I would have called your name out. So, and he was telling me. So I want to actually clear something that he was saying. So my last video, yesterday's video I made, he was asking me that, you know, is the giveaway going to be in form of an internet subscription or a prop firm giveaway. So to just clear the hair, so the giveaway that I said about yesterday is going to be in form of internet subscription. Okay, internet subscription, and I'll still be giving away prop firms as long as I see you guys, you know, activeness under my comment box. Of course, I will definitely give you guys a prop firm to go along with it. And next week will be our last series of webinars. So Friday and Saturday next week to be our last time meeting on understanding the basics of forex. So what's all this thing all about? Understand, is a series I want to put together, and we're in our third week. We actually started since I think March 14th. So I'm just actually breaking it down, giving you guys the nitty-gritties of exactly what forex is all about in my own perspective. Okay, because you can meet other people, other places, that they will tell you their own perspective also. Okay, but I'm giving you this thing so that younger me, the younger person of myself, younger, like, you know, like 2 years ago me, when I first heard about forex, will be able to see this and understand it. Okay, so without further ado, let me go into what I have for today. I can see that I'm actually lagging a little bit on my sample screen here, but that does not change the fact that I'm still live. So let me see. Okay, so it's good to meet you guys again. So let me share my screen and see. Let me tell you guys one. Okay, and okay, let's quickly see. So this is volume 6. Welcome again to volume 6 of understanding the basics of forex. Okay, I'm actually getting a lot of calls that, Victor, what's this forex thing about? What are you doing? How are you doing it? I want to get into it. I want to do it. Look, forex is like you giving birth to a baby. Okay, you can't expect the baby to just start, you know, walking the next day. The people think that forex, if you just learn forex like maybe today, you'll be able to withdraw tomorrow. It does not work that way. Okay, you have to take it one step at a time, because there are a lot of things to actually, you know, gather together. Okay, so let's continue what we're talking about. Let me first see the live control panel from on here. Okay, so understanding the basics of forex. So today is actually 29th of March 2025. Okay, 2025 March 29th. So let's see another part of my slide. This live stream is actually going to be a little bit short. Normally it's supposed to be for an hour, but because of countless reasons and other diverse reasons, we can't go for more than 40 minutes. Okay, so just stay tuned, get your chilled bottle of water and get your jotter and your pen. Okay, so let's continue. So a quick recap of what we did yesterday. So yesterday, from after the introduction part of the video, I didn't actually have enough energy, okay, because I actually quickly shot the introduction part of the video, then just shot the other part of the video later. So yesterday we talked about support and resistance, and I tried my possible best to break down exactly what support and resistance is all about. And if you guys still don't understand it, I still left an option of a resource in the description below. I think at the bottom, you see more resources section of the video, section of that description. You can click on it and just watch what exactly and that point of view of support and resistance. And I feel like any resource I give, just know that it is something that I wish I could explain that way, and I was not able to explain that way because of maybe you guys, because of my energy level and all that kind of things. Okay, so a quick review of what we did yesterday again. Talk about support and resistance. I talk about support, that support is always below, resistance is always what, above. So you have to put that one in your head. So let's continue. So yesterday I actually said that I'll actually start putting the topics together, that I'll talk about a topic on Fridays and Saturdays. Okay, so yesterday we talked about support and resistance part of the topic, and today we'll talk about risk management part of that particular topic. So let me quickly show you what I'm talking about. So what you will learn is also what I put out yesterday. So the topic was understanding support, resistance, and risk management. So I used yesterday to do what? To talk about support and resistance, right? So today I'm talking about risk management. Okay, so which I'll be talking about the last 3 bullet points, which is how to manage risks in forex trading, the importance of stop loss and take profit. I want you guys to know that part down. Okay, and number 3, risk to reward ratio and position sizing. So as I told you in the previous part of this series, I think was volume 4 I think it was volume 4. I talk about lot sizes. When I talk about that, lot sizes and risk management are interwoven. So like this will also be another version where I've also talked about lot size a little bit, but emphasizing more on what risk management. Okay, and if you're a new viewer, do want to smash the subscribe button, because I'm actually putting myself out here to educate people. And this one there's no paid promotion, there is nobody paying for anything on this thing. It is totally free. Okay, so without further ado, let me quickly go into this aspect of this video. Okay, all right. Okay, so how exactly to manage risk in forex? Now, there is a very thin line between what trading and what I'm betting. I mean, like sport betting. This is sport betting here, this is trading here. Okay, there's a very thin line between them, and the thin line between them is what? Risk management. Okay, in sports betting, you are not able to manage your risk. It's whatever you stake that you are willing to lose, or like it's whatever you stake that has gone. But in trading, whatever you put or whatever you risk, there's still an opportunity for you to do it, for you to take it back through what? Risk management. Okay, but let me talk about that. Let's emphasize on what I'm exactly talking about. So how exactly to manage risk in what? In forex. Number 1 on this list is never risk more than what you can afford to lose. So this is self-explanatory, right? Because people see forex as a day thing, because it's not something you can actually do in a day. So for you to actually manage, you can obviously see the topic of what I'm talking about today, risk management. So you must not risk more than what you can afford to lose. Okay, you must not risk more than what you can afford to lose. Let me break it down. Let's say that I have $100. Let's say that I have $100 and I'm trading forex. So and that $100 is literally my last money on me. And to relate it to what we're talking about, I can't risk the whole $100 because my life literally depends on it. So I can't risk the whole $100. So I have to break the what's it called? I have to break the risk to maybe like 10 places. Maybe I have to risk $10 in 10 places. Okay, and I can tell you for free that if you exactly know how to trade, you can't lose 10 trades in a row. You can't lose 10 trades in a row. So instead of you risking the whole $100 that you have in your balance in your account, just break it down into $10 per trade. Break it down into $10 per trade. I did the ideology of the inspector general that wants to go to war with maybe like 3,000 soldiers. Okay, for him to go to war with 3,000 soldiers, he has a strategy in mind for him not to lose his whole 3,000 soldiers. Okay, so if he sent forward maybe like 500 soldiers out of 3,000 soldiers, we still have 2,500 soldiers left. If he sent 500 soldiers to the war field, okay, he has managed the amount of soldiers to put forward. In case at the end of the day, 500 soldiers that went for the war are not able to conquer the war, if you send another 500 soldiers, instead of sending the whole 3,000 soldiers. I don't know if you guys understand exactly what I'm saying. So if he sends 500 soldiers, he's expecting the soldiers to bring how many slaves? To bring like 1,000 slaves at least. Okay? To bring 1,000 slaves back and for them to come back as well. So you have to treat forex like a business. You have to treat forex like a business. That's like as if you are amongst business people. Don't treat forex like as if your life depends on it. Like as if don't treat forex with a nonchalant attitude. That's exactly what risk management is all about. Because if you have the best kind of strategy and you don't know how to manage risk, you just be losing as if your family is chasing you or as if you are chasing for the village. Okay, as if you are cursed. So what is the essence of what I'm trying to drive at, right? Risk management is key, and never risk what you can't afford to lose. Never risk more than what you can afford to lose. You know what I'm saying? If I have $1,000 now, let's say I have $1,000 in my trading account, I can just say that okay, instead of me risking the $1,000 on a trade, let me just risk $200. At least I know that I have 880 more. I can afford to lose that. But you know, I'm trading a $100 account and I'm risking $80 for God's sake. Why? Okay, so I'm just trying to give more emphasis on exactly what I'm talking about. And if you can hear me and you can see me, please type Y in the comment box. So let's another part on how to manage risk. We have diversify trade to reduce risk concentration. So this is actually also self-explanatory. You know, you don't want to put your head in one basket, right? You have to diversify your trade. Let's say you risk $10 on Euro USD, also risk another $10 on another pair. Don't risk only on Euro USD because it is something that you can't really rely on, even though your trading strategy is the best. Okay, don't say that okay, because of one thing or the other, I want to just trade one pair. People are actually trading one pair and actually doing well, but compared to those that are actually trading more than one pair, I'm talking about more than one forex pair. And if you don't know exactly what forex or currency pair is all about, I spoke about it I think in day 2 or day 3. Check it out. I spoke about it. So like let's just divert a little bit. This is a series, and if you don't watch the previous one, you might not be able to understand the next one. So you have to start from the beginning. Okay, so a shout out to Adenikon Victoria. I can actually see that she's actually very active, and I am actually very passionate to teaching even female to know how to trade. It's not only males that have to know how to trade. Okay, I'm encouraging females to also trade. So let's go on to number 3 of how to manage risk in forex. So number 3 we have monitor market trends and economic news. So what you have to know is that, as I think I said this when I was talking about market participants, you know, the market participants, they are in grades, and we retail traders are actually the ones at the lowest bottom of things. Okay, so those central banks and big institutions, they actually have what kind of impact in the news through impact in the news, and the news affects the forex market. Okay, the news affect the forex market. So if you pay attention to news like NFP, which is non-farm payroll, and non-farm payroll is all about, is an every first Friday thing in the forex market, where someone does, I don't even know, but I think it's someone that will come and give out the news on the rate of unemployment in the United States, and that affect the market very badly. And it's a news. It's not as if anything. It's just a news that someone was broadcast. So you have to monitor economic news, so that in case you are placing your trade during that time, so you know that okay, this is not the time to place. People trade news, so, but people that don't know about news might actually be getting, stuck in one position because you don't know what news is all about. So you have to do your research on news, and you have to know how news works to counterpart with your trading and risk management strategy. Okay, I'll still speak more on exactly how to risk and what to risk. Okay, number 4 on this list, we have set clear entries and exit strategies. So I'll just give you a tip of the iceberg of what I use to set entries and exit strategies. So I use support and resistance. Okay, so when I see that the market bounce off a support, like how I told you about support yesterday, that it's like a ball that was shot by a goalkeeper and is descending down to the ground. So once I see that the market has bounced off of a support, and I see that it's already forming, like as if it's about to start heading up again, as I'm about to start forming a bullish engulfing candle, I will do what? I will jump on the trade. I will enter the trade. So for me to exit a trade, I have to see another confirmation that okay, this market is about to head in the opposite direction of what I'm trading. Okay, so set clear entries and exit strategy. I know that you guys have not actually gotten the hang of strategy, but just note this down in your journal, okay? Because you guys, as a beginner, I don't really expect you to know anything about exit strategy and entry strategy, okay? But you can also do your own research on it before my next time, okay? And I want to also tell you guys that next week is our last week. So come, tell your friends, because something massive is dropping next week. Okay? Something massive is dropping next week. So let me continue. We talk about how to manage risk. We said that you do what? Never risk more than you can afford to lose. Number 2, we talk about diversify trades to reduce risk concentration. Number 3, we said monitor market trends. Okay, follow the trend, follow the flow of the river. Okay, if the river is flowing like a waterfall, take your canoe, your small canoe, and just paddle with it. Okay, place your trade with the trend. If the trend is like is bearish, the market is falling and it's bearish, of course you have to look for selling opportunities. Okay, I'm not going to start telling you about selling and buys and all this kind of things. Okay, so number 4 said set clear entries and exit strategy. So let's go into another part of this risk management thing. And I'm trying to break down, I'm trying to dissect it as if you are cutting onion. Onion, you have to open it layer by layer by layer by layer. So like I'm helping you guys to actually unravel exactly what is going on in this forex thing. What's forex about? This is where you have to see it. This is where you are at the right place. So number next on the agenda of today, we said we're going to talk about the importance of stop loss and take profit. I'm sure this is a term that you guys have actually listen, like I'm sure there's something that has been ringing in your brain for a while now. If you ask anybody that how is your forex doing, how is the stuff, the person be like, I'm eating stop losses anyhow, I'm eating take profits anyhow. So like stop loss and take profits are a very essential part of trading. Okay, they are a very essential part of trading. So let me share my screen and show you guys what I have here. So number 1 on importance of stop loss. So we're going to talk about stop loss first before we talk about take profit. Okay, we have to talk about the bad aspect of things first before we talk about the good aspect of things, because you guys have to prepare your mind before you see. I'm sure that on your another people, another educators channel, they might be like, okay, let's first see the good part of things, the bad part of things. But we are not showing the bad, the losses and critical part of things. Before I show you the good side and the what everybody shows you on their screenshot and with their plans. So number one on importance of stop losses, we have prevents excessive losses by automatically exiting at a set level. So you guys, you get the whole concept of stop losses. Okay, it helps me to it prevents me from losing my money. Okay, I can lose my money, but not to a lot of extent. Okay, it's also another part of risk management strategy where you have to set your stop loss. Like this is the amount I'm losing. Okay, let's say I have $100 now, right? And I risk $10 out of the $100. So for me to risk that $10, I have to set a stop loss that, okay, when you get to $10, you have to close my trade for me. Okay, so that's just the whole concept of stop losses. You are the one that is going to set it to what you want to do, what you are willing to what you can afford to lose. Okay, so stop losses are a very important part of trade because they help you to stay in the game longer. Okay, look, I have $100 in my account, right? And I can risk $10 for 10 times. 10 times before I lose the $100, right? So I have enough time. It makes me stay in the game longer. If I set my stop loss the first time to $10, second time to $10, third time I can stay in the game for more than another 7 times. Okay, I want you guys to understand that stop losses are crucial, very, very, very crucial. I have to set your stop losses to what you can afford. Okay, what you can afford to lose. That's when you set your stop loss to. Okay, so number 2 on importance of stop loss, helps trader avoid emotional decision making. We just talk about that. Look, one thing traders in general, struggle with is that they tend to risk a lot of things. So when the trade is when they're not losing money, you're not scared. The emotions not come inside. You're not feeling so agitated and so angry. And come on. So stop loss will allow you to do what? To minimize your losses. Okay, it is like a tool to do what? To help you to cut your losses short. And it's you that you have to set that stop loss, because if you go and set the stop loss to what's it called, to something that you can't afford to lose, you'll be agitated and scared. Okay, that's the emotion now coming to it. Okay, so stop losses, set the stop losses to what you can afford to lose. I'm trying to emphasize more on it. Okay, so let's continue on number 3 on importance of stop losses. So number 3 here we have protect capital by limiting draw by limiting downside risk. So this is also exactly, I've talked about this already. It helps us protect our capital. It helps us stay in the game longer. Okay, it helps us stay in the game longer by protecting our capital. Look, that trade that hit my stop loss, that made me lose that $10. That made me lose more than $10. Okay, it could have made me even wipe my whole account. But I am the one that said that, okay, it's only $10 I'm willing to lose for this trade. Okay. So let me go into number 4 of this. Number 4, which is ensures that small losses don't turn into wiping losses. So like account wiping losses. So I talk about this. Something that kind of those losses. For me to lose $10, it means that trade could actually make me lose like $100. But I am the one that set it to lose $10. So another importance of stop loss is that it ensures that my account is not wiped out. Okay, it ensures that my account is not wiped. Some people do not even set stop loss. They will not set stop loss. They will not be crying that hey, forex is a scam, forex is this, forex is that, forex is, bro. How many stop losses have you set? Use your brain, use your business mentality. They will not use their business brain. They'll be treating forex like sporting bet, like as if they are in a casino. They will not apply risk management. They will not put stop loss. They will not be saying forex is scam. Anybody that come and look at forex is scam, I don't look at that. Look, bro, what made forex is scam? Like they lost a lot of money, pasta. They don't know how to trade. Unfortunately, I'm sorry, but you don't know how to trade. How many stop loss have how many stop loss do you put? You apply risk management. You afford what you risk what you can afford. Come and admitting that some forex is scam. That's a cup of tea. Go and find what is not a scam. So number four, I said ensures that small losses don't turn into account wiping what losses. Number five, which is what ideal for what traders who cannot monitor trades 247. So people like me that I can't be on my screen 247, bro. Sometimes I have to sleep, sometimes I have to eat, sometimes I just have to, take a walk, sometimes I have to pay. So if I set my stop loss, I'm rest assured that okay, is that this market hits my stop loss or what if I take profit? Okay, so like I can just close my chart, I can close my laptop and just say, okay, good day for today, I am done. Okay, whether the market is my stop loss or not, I shall know that okay, I have already afford, I've already risked what I could afford, and I'm not even really concerned about it. Okay, but I am at least like 90%, 89% sure of the trade I place, but there's still a 20 or a 10% chance that the market will go against me. Okay, so it is stop losses is a very good tool which is ideal for traders who can be on their screen 247. So let me go into number next, which is importance of what take profit. So importance of okay, I gave a very very decent image of how exactly a stop loss looks like on the forex chart, right? So this is exactly how a stop loss when your trade hits stop loss, this is exactly how it looks like because the red part of the screen, the red part of that what's it called, that highlights to is your stop loss and the amount you are willing to risk. Okay, so this is the market hitting my stop loss, not like my stop loss, this is just an example of a market hitting stop loss. Okay, and the blue part of things, look, you can actually you can customize this thing, right? You can customize this particular tool, whether you want that stop loss part to be but I just want it to it's just ideal for you to make that stop loss part red so that it means that you are losing, and that profit part to be blue or green to mean that you are actually in profit. Okay, so this is exactly how this is an example of what a trade hitting your stop loss. Okay, and it's not something you have to beat yourself about as like it's not something you have to beat yourself about if you apply what risk management. Okay, if you apply risk management, you shouldn't be bothered about all these things. Okay, so number next, we have importance of profit, importance of take profit, right? So number one, locks in profit before market reversal. So take profit is something that all the traders use, all the traders use, all online traders use. Okay, so take profit, it helps you lock in profit before the market start going in the opposite direction of the trade. Okay, so take profit is an essential tool and it's something that I use every single one of my trade. I use take profit. So number two on the importance of take profit, we have prevents greed from affecting trading decisions. So when I set my stop loss, when I set my take profit, I I close my chart. Okay, once I set my take profit, I close my chart because I know that it is either I lose my $10 or I gain my $50. Okay, and another thing about take profit is that it prevents you from being greedy. Okay, once I set my stop loss to this point, okay, this is where I want, this is where I anticipate the market to reach before any other thing happens. Okay, when I set my stop loss there, so once I set my take profit there, even though the market still grow across my distance, I'm a little less concerned because my take profit I've already taken my profit out. Okay, I've taken my profit out, and even though the market goes still continue going, you know, maybe I made $50 now, and where the market reach, where the market pass my stop, my take profit, I'm supposed to make $100. I'm already sure that okay, my $50 is already mine, sha. Okay, $50 is already mine. So it prevents greed. Okay, it prevents greed. So number next, on the importance of take profit, we have ensures consistent profit taking over time. So this is something that is also self-explanatory. When you want to set your take profit, once the market puts your take profit, and it's just help you ensure consistent profit. Okay, because some people the trade might be in their favor, but they might not set take profit, and when they're supposed to take their profit, they not take their profit. So like it's just it later end up being lost. So take profit just help you to what, ensure consistent profit over time. Okay, it help you ensure consistent profit over time. And number next on the importance of take profit is helps traders stick to a structured strategy. So when you notice that the strategy you are using to trade, or the strategy you are using to break down the, like to know when to place your trade, to know where to put your stop losses, to know where to put your take profit, is not working because maybe you are hitting a lot of stop losses than take profit. Okay, it helps you know, okay, this strategy does not work, or this strategy is just out of bounds for me. Okay, so take profit, it helps in diverse ways. I might not be able to, you know, put all the information on this particular video, but I want you guys to know to do your own research. Okay, I might not be able to give you everything on the platter of book because it is actually a lot of information. Okay, it's a lot of information. So without further, let's go into the last part of the importance of take profit. There are other kind of, by other importance, I just actually pick the ones that are, you know, applicable to me, and something that is quite common that all the traders come across. So number next, we have reduces the risk of losing unrealized gain. Unrealized gains. So take profit helps you to reduce the risk of losing more money after making money. You know, there's something that used to happen in trading, right? The market will be going in your favor, and where your take profit is supposed to be, you will not put your take profit there because maybe some people don't set their take profit at that price. So they will lose the money they already made, because if they made that money and the market start coming back and hit that stop loss, it's over. Okay, look, there's something that happened. I think that should be last year. That should be last year February, I think, like over a year ago, sha. So I was having an exam that day, and I set a trade on my Xness account. That time I was still trading $10, blasa. You know, I was just trying to gamble with the market. I didn't actually know what I was doing. So I set a trade on my Xness. I think it was a gold trade. I took the signal from one signal provider, and it was a gold trade. So what happened was that I was actually in a $14 profit. I didn't set stop loss, I didn't set take profit. That was my biggest regret of all time. And I could not set it because of my lot size was quite higher than the initial lot size I'm supposed to use, right? So so I was actually in the example. The trade was still going on when I entered the exam. I did not set stop loss, I did not set take profit, and my $10 was on the line. So when I was about to enter the exam, I saw that the trade got to $24, which is $14 profit, right? So when I came out of the exam, like 2 hours later, I was saying, okay, let me just, sir, video is paused. Oh, video is not paused. Video is not paused. I think it's your internet connection. So when I go back to my device at that time, that was about a year ago now. When I go back to my device, I just have to, it's my Xness I went to straight. That, let me check the trade that I placed, and boom, my $10 was wiped out, you know. So that is another lesson I learned, that that's not only the thing that happened. There's so many divers that I will not set stop losses, and sometimes the market will hit my take profit, and sometimes the account will get wiped out. So just to give you guys the experience I had, it was okay. I think I set a stop loss. So I set a take profit, but I didn't set stop loss. Okay, I set a take profit, but I didn't set a stop loss. So a $10 account, there's no way I could risk $1 for every trade. Okay, it does not work like that in forex. Okay, because $1 can easily go. Okay, but a $10 account, there's no way I could just I cannot set risk management on a $10 account because of the account size was too small. Okay, so as I said, I set the take profit, but I didn't set the stop loss. It remained this close. It was like 2 more pips to hit my take profit. That's how the market just went down, and I didn't know. If that was on my device at that time, I would have closed the trade. I swear, I would have closed the trade. Okay, but unfortunately, I was not with my device and I didn't set the stop loss, so like I was vulnerable. It's like an open net of a football. It's like an open football net. Okay, the market was smashed into my what's it called, my balance. So there's something called in forex trading that when you lose up to the amount of your balance, like if you not set stop loss, you will not lose up to the amount of your balance. It's called a margin call. It is called a margin call. Your what's it called? Your broker might quickly alert you that margin call maybe like you remain like maybe like 0.21 dollars left. But your broker will not close the trade for you. Why would they close the trade for you? So what will just happen is that all your money will be wiped out. Okay, if you don't set stop loss and the trade is going against you and the trade gets to and the losses get to your balance. Then I have a $100 account and I'm losing $100. Okay, if I have $100 in my trading account and I'm losing $100, it's what's it called? It will be wiped out. So what is the lesson here? The market will stay irrational longer than your trading account. The market can be doing targets and your own trading account has grown. Okay, the market is continuous. It is your own trading account that is not continuous. So when you lose $100, does that mean that trading will stop? No, trading will not stop. Okay, trading will not stop. $100 goes for it. So you have to give yourself brain and apply proper risk management. Okay, so no further, let me continue to talk about the importance of stop losses, and it's very very key that you add stop loss. Like just add stop loss. Okay, and don't let stop loss be too wide. Okay, just risk what you can afford to lose. Okay, and take profit. Make sure your take profit is more than your stop loss. Okay, like let's say I'm risking $10 on the trade. My take profit should be $20 and above. Okay, my take profit should be $20 and above. So let me continue. If you can hear me clearly and you can see me clearly, please type Y in the question box and the chat box. Please type Y. Type Y. I'm dispensing a whole load of information, but I want you guys to understand me. Okay? Type Y. Okay, so let me continue. We'll soon close this, we'll soon finish this. So number next, okay, I actually showed a picture again of exactly how stop loss looks like. So these are exactly how take profit looks like. I see that the market is going up down. Once you have to understand that the market does not just go like this. Like the market does not just go up. It will go up, come down, go up, come down, go up, come down. I think in my next video I'll talk about higher high, higher low, lower high, lower high, lower low, lower high, lower low. It's something is a basic ideology in forex. So I think I'll talk about it next time we meet. So I'll create a whole slide on it on its own. So this is exactly how the take profit looks like. What the take profit is you understand that the blue part of the stock is wider than the red part of it. Okay, the blue part of the thing is the blue part of the trade I place is wider than the red part of the thing. And the red part is the stop loss, and the blue part is the take profit. Okay, instead ratio next. So number next, okay, risk to reward ratio and position sizing. So risk to reward ratio, as I said earlier, you are risking like $10. Okay, let's do a quick math, right? Let's say I have $100 in my trading account. Anytime I risk any trade, the amount I'm risking should be times 2 of what I'm getting. Okay, let's be for example now. I go to a market. Let's just pick any market around you. You go there. Sorry. You go there. You buy a loaf of bread. Just think about the amount of loaf of bread in your area. But in my own area, a loaf of bread is 2,000 naira. So I buy a loaf of bread. I'm just using that as an example. I buy a loaf of bread. I brought it to my house. That loaf of bread, if I want to make money on that loaf of bread, I'll go to another area to sell that loaf of bread, but I will not sell it for the amount I bought it. Okay, I will not sell it for that 2,000 naira I bought it for. And you too, you will not sell it for that amount you bought it for. Okay, so if I buy a bread of 2,000 naira and I sell it for 3,000 naira, I add a gain of what, 1,000 naira. Okay, that's the whole concept of trading. Don't what's it called? Don't gain the same thing you are selling. Like, don't gain the same thing you are risking. Let me show you a picture now. You see the stop loss part of things is smaller than the profit I'm expecting. Okay, you can see that in that the other side, you can see the left side is the descending part. You can see that the profit part is down and the stop loss part is up. But the stop loss part that is up is still small. So, like, as if you look at the stuff I wrote there, you see risk to reward ratio measures potential profit versus risk. For example, 1:2, which is I'm risking 1 to get 2, or I'm risking 1 to get 3. So if I have another dollar account like that now, if I risk $10, is that I make a profit of $20 or $30 or more. So if I are doing 1:20, which means that if they risk $10, they are getting $200. Yeah, $200. Do the math. So don't take profit of what you are risking. Don't do 1-to-1. Okay, don't do 1:1. Okay, do 1-to-2, 1-to-3, 1-to-4, 1-to-5, 1 to infinity. Okay, but make sure you set your take profit higher or larger than your stop loss. Stop loss is very small, and take profit is very, very large. Okay, so if I'm risking $10, maybe at the trade I'm supposed to make money on is $30, I'll risk $10 for $30. Because I can risk what I can afford to lose. If it's $10 I can afford to lose, I'll risk it. If it's $5 I can afford to lose, I'll risk it. Okay, but don't risk your whole capital. In any given situation, don't risk your whole capital. Okay, I'm talking to you as a professional to a newbie. Don't risk your whole capital. Okay, because you end up regretting it. Let me continue what I'm talking about. So risk to reward ratio, number one, it aims for a positive ratio to maintain profitability over time. Talk about this, you have to think about the profit you are getting versus the risk you are risking. Okay, you can't say that you want to risk $10 and make $10 back. That's not a gain. Okay, that is not a gain. So number next on risk to reward ratio, we have number 2, position sizing determine the trading volume based on account size. So now position sizing is literally lot size. Okay, it's literally lot size. So let me use another example now. And as I told you earlier, that lot size is the volume or the number is the volume of quantity of a thing you want to buy. Now let me use for example now. I buy a bread, it's a 2,000 naira bread, which is one loaf. I buy 3. So that's making 6,000 naira. That is on the line if I don't sell those bread. Normally, if I buy one, I'm just losing 2,000 naira if I do not sell one. Okay, so the lot size there is 3 of that particular product. So, and if I sell those 3 products for double the price, which is if I sell 2,000 naira bread for 4,000, and that is 4,000 times 3. Let's just do the math. Let's be free. Okay, 4,000 times 3, that is 12,000. So I'm using 6,000 to gain 12,000. Okay, and if I'm not able to sell that bread for 12,000, I am losing 6,000. Okay, that is the essence of risk management. And that 6,000, if is more than what I can afford to lose, I will not just buy a bread of 6,000. I'll just buy one of 2,000. So lot size and risk management are interwoven. Okay, lot size, risk management, and pips, they are interwoven. And I will appreciate if you guys can also do your own research on it. So next on this is helps protect capital and sustain long-term trading. So it's something I already said. If you have $100 and you have 10 times to trade that 100, which is $10 each, I have a longer time of trading instead of me risking the whole $100. Okay, so if I risk $10, to make $30, look, for that, if you want to risk $10 to make $30, you only need 3 out of 10 to work and you'll be profitable. I was playing it on the next slide. If I lose 7 trades out of that $100, which is like, I have 10 trades to lose the whole account, which is 10. So if I lose 7, let me put it in the camera. If I lose 7 and I win 3, I am still profitable. I will explain it. Now, if I do since I do 7 trades and I'm risking $10 for each trade, I am losing $70 out of my $100. Okay, and if I win 3 trades out of let's just do the math now. So $70 minus the $100, I'm left with $30, right? So that $30, if I now win those 3 trades, so that is 10. I'm risking $10 for $30, and I win $30. So $30 times 3, that is $90. $90 plus your initial $30 is $120. I will share it in my next thing. I'll share it in my next slide now. Now see this. It's a quick math. Now, you only need 3 out of 10 win rates to be a profitable trader. Okay, it's just 3. If you have 10 lives, let me use life as another example. If you have 10 lives and you win 3, you are a profitable trader. If you have 10 lives and you win 3 and your risk to reward ratio is 1 to 3, trust me, you are already a profitable trader. Okay, you are already a profitable trader. Now imagine if you can win 5 trades out of 10 trades and you are using 1 to 3 risk to reward. Let me just complain. Okay, I win. My win rate of my own strategy, the way I trade, my win rate is 8 out of 10. And if you do the math, if you do 1 to 3 of 8 out of 10, I don't even do 1 to 3. I do like 1 to 10, 1 to 20, or all kind of things. So if you do 1 to 3 for 8 wins straight, 8 wins, 8 8 sure wins straight. So do you understand that I'm not a profitable trader? I am beyond profitable. I'm beyond profitability. Okay, let's quickly do this quick math now. Let's do this math. So quick math, you only need a 3 out of 10 win rate to be a profitable trader. So now you have a balance of $1,000, right? So now losses, if you risk 1% of your account is it 1%? Yeah, 1% of your account 7 times. Now look at this. So losses, if you risk 1% of your account, so I'm supposed to put like 10%. Okay, but let's just assume it's 1% of $1,000 of my account 7 times. Now that is $10. The 1% of $1,000 is what is $10, right? So I'm risking $10 in 7 places. That is 7 trades. Okay, because you know we have to lose 7 trades out of 10 to be like to. I don't know if you guys are following me up on this thing. I don't know if you are following me, but let's continue. So we are risking $10 in 7 trades. So we lost $700. Okay, we lost $700. Now our balance is $1,000 minus $70 is $930. Okay, I'm trying to explain the risk to reward ratio. Stay with me. So I'm trying to explain the risk to reward ratio. So now our balance is $930. Now we've lost 7 trades in a row. Now the 3 win rates we are waiting for is the last 3 trades, or maybe in between those 7. In between that, they might not follow the win rates might not follow each other like that. Okay, it might be the first, the second, maybe the first, the 5th, and the 9th trade. So far is 3 trades. So we've lost 7 trades in a row out of 10 trades. We are left with 3 trades. Now let me show you the last 3 trades. So now profit if you gain, what did I write here? Sorry, profit if it's 1% of profit if you gain 1% of your account 3 times. Okay, so 1%, okay, 3%, sorry, 3% of your account 3 times, because we are risking $10 to gain $30. Okay, so that $30 times 3 trades. Okay, times 3 trades, which is what, $90. So $90 that we gain in profit is more than the amount we lost. And if you add that $90 to the initial, to the balance, that is $930 plus $90 is what it is, $1,020. $1,020. So the whole concept is that if you risk what's it called? You only need 3 out of 10 trades win rates to be profitable. Just 3 out of 10 and you'll be profitable. It might sound like I'm yapping or talking trash. So far you guys can understand. Look, it's not about how far, it's about how well you guys understand exactly what I'm saying. Okay, if you guys comment, if I see a lot of comment that you guys are saying that I don't understand, I will go over it again. I will personally go over it again, because it's not about how many things we've covered. It's about how many things you understand. Okay, so don't hesitate to draw me back. If I can explain to you on this YouTube, DM me on Telegram. I will jump on a call with you and I will explain it personally. Okay, look, you're not giving me anything. I'm not giving you, like, it's all value. I'm just giving you pure value, and I want you guys to value my time. So let me. So I talk about the risk to reward ratio. Where I said you only need 3 trades to be profitable out of 10. We are using a 1 to 3 risk to reward ratio, and that was 3. I said that it's you risk $10 to make $30. 3 times out of 10 times you are profitable. So with no further ado, I would like to give you guys my key takeaway, which is number 1: effective risk management is key to long-term success. Okay, this is the whole thing I've been driving at. Okay, if you apply risk management the way you're supposed to apply it, you are going to be successful for a very, very, very long time. Okay, you're going to be successful for a very, very long time. So number 2, we said, always use stop loss and take profit level and something I've already given a story on, and I learned my lesson when I went to exam. I didn't set stop loss, but I set take profit sharp. But there's some people that don't set stop loss and take profit, but they don't know what they are doing. Okay, maybe they think that they are magicians or something. Magic doesn't work in forex. Even prayer, your prayer, you will pray to God in church to cure your poverty. Prayer does not work in forex. I can tell you, prayer does not work in forex. It's something I can testify with. The only thing I pray to God is that pray for grace to be able to see opportunity on the forex chart. Prayer does not work in forex. Magic does not work in forex. Okay. So number 3 on the key takeaway: maintain a good risk to reward ratio for sustainability. As I said earlier, just 3 trades, 1 to 3 risk to reward is perfect. And you want to extend it to 5 win rate, and 1 to maybe 10 risk to reward is the best. So number 4, which is the last thing, is control emotions and stick to your strategy. Once you see that your strategy is already giving you 3 win rate and it's down to 1 to 3 risk to reward, stick with it. Okay, don't start jumping from one place to another and start looking for more strategies. Okay, so without further ado, I'd like to say thank you guys so much. This live actually took like 50 something minutes, almost like I appreciate you guys for coming on here. For coming on here. Of course, I'll drop the clips. And about the giveaway, I said yesterday that I said at the end of that video, if you guys watched to the end of that yesterday's video, which is on 5, I said that I'm giving away 15 gig to 5 people. And for you guys to win that 15 gig, I said that you should comment your. And again, this 15 gig is only available for Nigerian. Okay, because I don't know what I'm using, what I'm using to send stuff. So 15 gig of internet data to 5 people, 15 gig of internet service to 5 people, and for you to start the chance of winning, just comment your number and internet service provider, like maybe MTN, Airtel or stuff. I'm sure people that are watching me from India will not be able to understand that I'm talking about more. That's just my own way of giving that. And they are also asking me about what's it called, prop firms. So I actually have a friend who is a WILLISCAPITAL affiliate. In case you want to buy a prop firm, I will leave, there is a link in the description, and a 10% off. And the best thing about this prop firm is that there is no there is no hidden rules attached. There is no there is no trading days. Okay, so I'm not actually, it's not a paid promotion or anything. I just want my friends to get more more sales. Okay, I just want my friends to get more sales. And about the prop firm, I'll give away prop firm very soon, probably next week. But I can't promise. Okay, I can't promise, but I will try and find a way of getting a prop firm. And you guys will see the update on my Instagram. I'll definitely post it there about prop firm and stuff if I want to give it away. So with no further ado, let's call it the end of this nice webinar. I'm sure you guys gained a lot from this webinar. Okay, I'm sure you guys gained a lot. I'm sure you guys gained a lot from this webinar. I would appreciate you guys if you guys can share this particular video. You can share it, you can like it and comment. And if you are a new subscriber, do what to subscribe. Look, it's not about me, it's about you. I'm not gaining all this value. I'm spitting it. This what I'm talking about took me more than a year and a half to get the hang of. Okay, so I just appreciate if you guys can do well to subscribe. That's the way I can repay my hard-earned time. So no further, I actually have a meeting now with my community. I want to join my Telegram community, the link will be in the description. And you also message me on Telegram, the link will also be in the description. I do want to follow me on all of my socials: X, which is formerly Twitter, Facebook, and Instagram. No further ado, let's continue right